Slightly weaker from yesterday's levels, where I think we reached about 675, so around 680 this morning, but really still holding at these stronger levels against the dollar this week.
Still relatively strong indeed. It's still very much also a dollar story. The dollar remains weak. There's still a lot of pressure on the Fed to roll out another round of quantitative easing, and then back home there's a growing pressure on the South African authorities to try and do something to weaken this exchange rate. So it's coming from both sides, and any kind of rand weakness at this stage is seeming to be temporary.
Yeah, it really looks like a bit of a tug of war. Maybe looking at that quantitative easing, and of course we know that the Fed is meeting again early next month. Do you think until we get some more clarity out of the Fed at that meeting that we will see the dollar on this weakening bias?
I think so, Steve, and I think the critical thing out of that FOMC is how big that quantitative easing is actually going to be. I think the market's almost pushed the Fed into a corner. I think they've got to come out with something. The question is the magnitude of the quantitative easing. If they go for like a big bang approach, a huge stimulus package, one-off, then I think actually the dollar could enjoy some kind of a relief rally shortly after, because then the market will say, well, look, we've priced in now all the quantitative easing. The Fed has really got no bullets left. But if the Fed comes out with more of a kind of open door policy where it says it's going to kind of roll out quantitative easing in a steady but a fashion that won't necessarily end until they see conditions improving, then I think the dollar could remain weaker for longer, because then the market is uncertain as to when that quantitative easing will actually subside.
Of course, we had both the Finance Minister Pravin Gordhan and the Reserve Bank yesterday talking about the rand and expressing their concerns about the rand's levels, and really saying that the foreign capital inflows into South Africa are likely to persist in the short term at least, and highlighting the downside risk to inflation. Do you think this is a bit more dovish than expected and really pointing towards an interest rate cut either in November or January?
Well, we've definitely seen it in the FRA curve. There's been some receiving interest there. In other words, the market is increasing its bets that the SARB at least will cut interest rates at the next month's meeting. So yes, I think some dovish comments, and one of the reasons for another interest rate cut rests with the disinflationary effect that the rand is actually having. So I think it opens the door for more policy accommodation, although our house view remains that they're probably going to keep rates flat for now.
Of course, Finance Minister Pravin Gordhan saying that it's impossible for South Africa to go it alone in this currency war, or what could turn into a currency war. Of course, we have the G20 meeting coming up next weekend in South Korea. Do you think this is something that's going to be really top of the agenda at that meeting? Indeed.
I think there's three critical events coming up on the table. We've discussed the FOMC, the G20 is another, and of course the medium-term budget is the third and final one. The G20 meeting is probably going to have currencies high on the agenda, and it's difficult to know what all of these policymakers are going to do to achieve or prevent their currencies from strengthening against the dollar. I think that's the way the market's going, and I don't know what policy intervention is actually going to prevent that. But needless to say, there'll be more rhetoric about the strength of these emerging market currencies, and that could also maybe, hopefully, the sentiment could push the dollar a little bit stronger. But we're not holding our breath. I think what we've got to see is action from the Fed, and we've got to see things like the focus shifting away from the US macro situation and moving maybe back towards the European debt crisis before we start seeing euro-dollar actually starting to turn around. I think the officials' comments are going to have a fairly limited effect.